Welcome back to the Engineered Impact Podcast. I'm Dan Korth, and today we're going to talk about one of my very favorite topics, banking and your savings. Okay, now that might sound a little nerdy, but I'm an engineer and I am allowed to be a nerd. So let's dive into this. All right, we talked a number of times about savings on the podcast, right? We've talked about different aspects of savings. We've talked about why it's important, how it allows you to strengthen your financial house. We've talked about the fact that savers are losers, right? You can't save your way to wealth. Today, I want to just talk about where you hold your savings, okay? Now, there's really two purposes to saving, right? One, you're either going to just hold it in cash as liquid reserves to cover whatever life throws at you, right? Whether it's unemployment or an illness or a home repair, car repair, whatever it is, we all just need some liquid cash around, right? I like to peg that number at least 3 to 6 months worth of the minimum amount that you would need to live on if you lost your job. That's how I figure it, okay? But we all need a pool of just liquid cash that we can draw upon when life throws something our way, right? The second reason for saving is as an opportunity fund for when profitable investments come up, okay? Now, that could be also cash that you hold that, you go to invest in a piece of real estate. It could be money that you're putting in your qualified retirement plan, whatever it is, wherever you hold your money to invest. Okay, that's the second purpose for savings is just an opportunity fund. So when an opportunity comes up, you can invest in it, right? So today I really want to focus on the first one, the liquid savings. Okay, so most of us are going to put our liquid savings, the money that we might need at a moment's notice for whatever reason. We lost our job, we need to cover a car repair, whatever it is. Most of us are going to hold that in some kind of a bank account, right? Now, banking is so fascinating to me for a number of reasons, okay? Without question, it is the single most profitable business in the world, okay? It's even more profitable than being a politician. That's pretty hard to do, okay? Number two, the way banking works is actually really, really interesting if you get into it, especially if you can figure out how to be on the right side of banking transactions. Super interesting. The third thing that fascinates me is the things that banks get away with is absolutely jaw-dropping. They're amazing people. They abuse the trust of their customers. They lose money hand over fist and yet manage to always bounce back. It's just incredible. And I'll never forget the thing that really got me interested in banking was there was a morning in March of 2013. I woke up and this was well into my foray into economics and learning about investing. And so I followed the financial news daily. Okay. And I woke up this morning to the news that everyone in Cyprus had woken up to the news that their bank accounts were frozen. Okay. You couldn't go to the ATM and get money. You couldn't go inside a branch and get money. You were just out of luck if you didn't have cash at home or a credit card that worked. Okay. And I looked at that and I'm like, wow, like what would that be like to wake up and realize you were frozen out of your bank account? All right. Well, I don't recall the details, but this was during the middle of the European crisis. I mean, the entire continent was in crisis after the Great Recession, and maybe this has happened before. This is the first time that it really caught my attention, and it was the result of a number of things and shenanigans or whatever. But the bottom line was, for the guy on the street, he was frozen out of his bank account, right? And what ended up happening was, at the core, as I recall, it was a liquidity crisis. The banks just didn't have enough cash to pay out everything that they had to pay out, and so they just stopped giving out money and they locked their doors. Well, the way they ended up solving that was what they call a bail-in. Okay, now we hear a lot about bailouts, right, where the government is just paying people because they made poor business decisions, right? They're bailing out the banks and the airlines and the hotels and the cruise lines and everybody and their dog right now, right? Well, that's a bailout, the government paying people, okay? A bail-in is something that I've only ever seen happen at banks, but basically what happens is you have money, supposedly, in a bank, and they're just going to take some of it. Some of it's just going to disappear, all right? So in Cyprus, what ended up happening is they have a similar system to what we've got in the United States, right? So in the United States, we've got the Federal Deposit Insurance Corporation, or the FDIC, right? When you go into a bank to open an account, they're going to say FDIC insured. And what that means is that up to $250,000 of your savings is insured by the federal government. So if your bank fails, the federal government will insure up to $250K of your savings. Okay. Cyprus had something similar. It was 100,000 euros at the time. Okay. I don't know what it is today, but at the time it was 100,000 euros. Okay. So the way this bail-in worked is if your bank account balance was under that limit of 100,000 euros, they just took 6.75% of that for themselves. Okay. That's what they used to help kind of recapitalize themselves. Now, if you had over that amount, I think it was about 10% that they took. Okay. So once the bank reopened, your account was just 6.75% or 10% lower than it had been. Okay. And there's nothing you could do about it. So I saw that, and it really got me interested in banking and how it worked, and just thinking, I mean, because you see these banks, and they've got huge buildings, and they run the world, right? And so it was just fascinating to me that they could be so weak financially. So we won't delve a lot into the specifics, but it really got me interested in banking. So I started learning more about how the business works. I geeked out, and I'd start doing things like looking at their balance sheets and trying to understand how they were investing the money that they had saved, what they did with it, things like that. And I don't know, to me, it's a fascinating business. So anyway, what I really want to talk about today is, as I've learned all of this stuff about banking, I've come down to, there are 5 things that when I go to put my savings somewhere, there are 5 factors that I want to look at. And I want to just throw these out there for you to consider. Okay. So these are 5 things that when I look at a financial institution that I'm going to trust with my savings, these are the things that I want to see. Okay. So to preface this, just remember, every dollar that you saved, you had to go to work to earn it. You had to pay taxes so that it came home in your paycheck. You had to pay your mortgage, your car payment, clothes, band, ballet, soccer, whatever it is, right? You had to pay all your expenses, all your taxes, do all the work to have this dollar left over to save, right? This is a precious dollar. So to me, I want to make sure it's put somewhere that it's going to be there when I want it, and it's going to be safe, right? So here are the 5 things that I look for in a financial institution where I'm going to hold my savings. Okay. The first one is, are they worthy of your trust? Okay. Now, my favorite whipping boy for this topic is Wells Fargo. Wells Fargo, since 2016, has been implicated in scandal after scandal after scandal after scandal. They are absolutely unworthy of anybody's trust. Okay. Now, it started with the scandal broke that they had been opening millions of unauthorized customer accounts because basically the bankers were padding their pockets. They got bonuses for hitting quotas for opening a certain number of accounts, and I think certain types of accounts. And so at some point, it just became part of the culture that you would just, you had a checking account for Joe over here. You would just take Joe's social security number, birth date, and go over here and open some other account for him. And you get a fee for that. You get a bonus for that, right? So they were doing that. And then later down the road, there was another one about, I think they were selling unneeded auto insurance to people, and ended up repossessing people's cars because they weren't able to make their car payments because their car payments were so much higher than they expected because of this insurance they'd never asked for. There was another one where they were found to be selling investment products that had outrageously high fees in them. And it just went on, and it's been going on for years. Okay. I have no idea how many hundreds of millions of dollars, or tens of millions at least, they paid in fines and fees and reparations to people over these things. Okay. So is it just Wells Fargo? No, probably all of the big banks are doing this stuff. Wells Fargo is just dumb enough that they keep getting caught, right? But they are absolutely unworthy of anybody's trust because they just abuse their customers, right? I don't want to do business with somebody like that. I absolutely do not want to give my dollars to somebody like that. So that's the first thing, right? Is this place worthy of your trust? Number 2 is liquidity, right? Which really just means, is your money going to be there when you need it, right? When my car breaks down and I got to go pay the auto mechanic, am I going to be able to get the money out? Okay. So the thing to understand here is when you take your money to a bank and you hand them a check or you hand them your cash, they're not taking that back and putting it in a safe, right? They're going to put that money to work, right? So that's okay. There's nothing fundamentally wrong with that. But the thing to understand is that banks don't have a lot of money. They don't keep a lot of cash. And so even though on your bank balance, it might say you have $250,000 in there, and the federal government may say they're going to insure that. If you go in and you ask for $10,000 in cash, in normal times, they might give it to you, okay? But if they do, they're going to fill out what's called a suspicious activity report and report it to the federal government, because apparently only criminals and terrorists take out $10,000 or more in cash, okay? Now, if it's not a normal time, like right now, right, we're in the middle of this COVID-19 pandemic, bank deposits become severely, or bank withdrawals end up getting severely limited. I think it's eased a little bit, but when this whole thing started, there were a lot of stories about people going in and trying to get like $3,000 or $5,000 in cash because they were nervous, right? People get nervous and they just want cash. And in some cases, the banks wouldn't give it to them. I mean, that's not that much money, right? $3,000, $5,000, they couldn't get it. And so just understand that if you need a lot of cash, the bank may or may not be willing to give it to you, right? And that's one of the reasons I'm a huge advocate for keeping some physical cash at home, right? Now, I don't want all my savings at home, obviously, but having a little bit at home just so you've got access to it is a smart thing to do, okay? So number two is liquidity, okay? You're going to be able to get your money back when you want it. Number three is safety, okay? And this really comes down to understanding where is the financial institution holding your savings while they have it, right? So if it's not in a safe, if they're going to go out and invest it somewhere, I want to make sure that they're investing it in prudent things like my neighbor's house or my neighbor's business where there's real collateral, real asset, or like a business, assets that are generating cash flow, or they're giving somebody that's going to go buy a rental property that's cash flowing, something like that, right? Those are prudent investments to make. And that provides safety. It allows the bank to grow. It provides safety for you as a depositor. But a lot of banks, what they do is not that, okay? A lot of banks are investing in things like buying shares of other companies or buying their own shares at all-time highs, okay? That's a dumb thing to do. A lot of them are still, despite the 2008 crisis, they're still investing in things like subprime mortgage loans and subprime auto loans and subprime student loans. The reason I call those subprime is because those borrowers are very risky, right? There's either because they don't make a lot of money or they have bad credit, or for whatever reason, they're in this category of people that aren't terribly likely to pay their loans back, okay? So I don't really want my money going to those kinds of loans, right? And on top of that, a lot of those loans are either not collateralized or they're poorly collateralized, right? Maybe so, like for example, if a subprime auto loan, right? You're loaning my savings to somebody that has very questionable credit worthiness in the first place to go buy a depreciating asset, right? I don't want their car, I want my money, right? Somebody who's investing in subprime student loans is investing in somebody that's getting an underwater basket weaving degree and taking out $150,000 in student loans to do it, right? So that they can go be a waiter and make $5 an hour or whatever, right? That's a bad loan, okay? I don't want my savings going to things like that, okay? So to me, it's very important to understand how the financial institution is investing my savings, okay? Now you can find these things out by going and looking at a bank's financial statements, okay? I'm an ultra geek, I do that kind of thing, but just to understand, like most banks, that's what they're doing, right? They're investing in some good things and some very questionable things, okay? So number three is safety. Number four is I want an institution that's going to provide a decent return on my money, okay? Now this is where banking becomes super, super fascinating in terms of how the business works, okay? So again, we already talked about this, right? You worked hard, you made all the sacrifice to have that dollar left. You're taking all the risk, putting that dollar in your bank. It should be mostly tax-free, but there's some risk there, right? So let's talk a little bit more about what really is happening when you put that dollar in the bank, okay? So let's say you have $10,000 that you put in a savings account, right? Again, they're not going to stick that 10 grand in the safe. They're going to take it and they're going to go put it to work, right? So let's say John comes and he wants to borrow $10,000 to go buy a car, okay? The bank does a credit check. Hopefully he's credit worthy and they'll say, John, congratulations. Here's $10,000. Go buy yourself a new car, right? And John will sign all the papers and let's say 5%, right? They're going to loan him 10 grand for 5 years at 5%, okay? So to keep the math simple, let's say 5%, 10 grand, that's $500 a year, right? All right, so the bank is going to make $500 in interest on this loan this year, okay, in year one. All right. Now, I looked this up right before I started this, and it was even more appalling than I thought. So on a Chase Premier checking account, I just pulled up one of the local banks here. You're going to earn a whopping 0.01% interest rate on balances between $10,000 and $25,000. Okay, so on your $10,000 in savings, you're going to earn $1 in 1 year for having your money in that savings account, right? So think about that. Okay, so you did all the work. You did all the sacrifice to put this $10,000 there, and you are going to be rewarded with $1 a year. Okay. Now the bank took that money, they took your cash, set it behind the counter, and then John came in and they gave John your $10,000, right? Well, how much was the bank going to get? $500. Okay. So what was the cost of that $500 to them? It was the $1 that they paid you, right? So they pay you $1, they made $499. Okay. If I'm doing my math right, that's a 49,900% return. Okay. Now, what did they do to get that? Nothing. They brokered the deal, right? So that is a raw deal. Okay. Again, you did all the work, you made all the sacrifice, and yet you're getting $1. You're getting 0.01%. They're getting 49,900% on your money. Banking is awesome if you're on the right side of it, right? But most of us as depositors are not on the right side of that. Okay. So I want a place that's going to give me a decent return on my money. Okay. Now I don't begrudge them earning something on my money, but that's a raw deal. Okay. Now the last one, number 5, is tax benefits. Okay. You know, the only thing worse than earning 0.01% on your savings, that's getting taxed on that 0.01%, right? You make $1 and they're going to come and take 22% of it. That's a sucker punch, right? So it's pretty hard to avoid the IRS, but if there's any way to at least have some kind of tax advantage, ideally have no taxes on the growth of my savings, I'm going to be really interested in that. Okay. So let's sum that up again. Okay. So the 5 things that I look for in a financial institution where I'm going to park my savings that I've worked hard for, that I've sacrificed for, and that I want to count on being there when I need it are: 1, I want to make sure, are they worthy of my trust, right? Are they not treating their clients with disdain and disrespect? Okay. Number 2, liquidity. Am I going to be able to access my savings when I want it? Okay. Number 3, safety. Are they investing in a way that I'm confident that they will have the money there when I need it? Again. Number 4, are they going to reward me with a decent rate of return? And number 5, is there a way that I can get tax advantages, right? I can save on taxes from what I'm doing. Okay. So if that sounds like a pipe dream to you, at one time it did to me too. Okay. But I'm happy to report there are ways to do these things. There are institutions that can actually provide these things. Okay. So if those things sound interesting to you, stay tuned, because this week we're going to start diving into the coolest place I've ever found to hold savings. Okay. But in the meantime, as we start getting into that, think about these 5 things that we just talked about. Okay. And think about where you're holding your savings. If you're holding them in a traditional banking account, savings or checking account, chances are you may not be feeling real good about these 5 things that we talked about. Okay. But take a minute to just think through that, and then stay tuned. We're going to talk about how we can get all of these things in a financial institution, in a place that's available to you today. All right. That's what I've got for you today, and I will talk to you next time.